All right, let's talk about one of the biggest, oldest questions in finance. Gold or stocks? Where should you put your money? Is it the classic, timeless security of gold, or is it the massive wealth-building power of the stock market? Today, we're going to settle it.
So here's how we're going to think about it. Are you trying to build a defensive shield to protect your wealth, or are you building a high-performance engine to grow it? That, right there, is the real question at the heart of this whole debate, and we're about to find the answer for you.
First up to the plate, gold. I mean, for literally thousands of years, it's been the ultimate symbol of wealth, of stability. When the markets get choppy and things look uncertain, a whole lot of investors see gold as their financial shield.
So, what are you actually doing when you invest in gold? Well, it's definitely not some get-rich-quick scheme. No, it's a wealth preservation play. Think of it like a tangible anchor for your portfolio. It's something real that holds its value, especially when inflation is eating away at the cash in your wallet.
So why do people really flock to gold? Well, its main job is to be a hedge. When inflation goes crazy or the world gets a little chaotic, gold becomes that safe place to park your money. Just think back to the 2008 financial crisis. The stock market was in an absolute freefall, but gold prices, they soared. That's its superpower. It often zigs when the stock market zags, which makes it a fantastic diversifier. And of course, you can literally hold it in your hand, and there's a certain kind of security in that you just can't get anywhere else. But, and this is a big but, it is not a perfect investment. A bar of gold doesn't generate a single cent of income for you. There are no dividends, no interest payments, it just sits there. And if you own the physical stuff, you've got to pay to store it somewhere safe. Plus, for all its talk of stability, its price can be surprisingly volatile day to day, pushed around by global demand and, just general market sentiment. Okay, so we've talked about the shield. Now let's shift gears and talk about the engine. We're talking about stocks, the #1 tool for building serious, long-term wealth.
When you buy a stock, you're not just buying a ticker symbol on a screen. You are buying a small piece of a real company. You become a part owner. And as that company succeeds and grows, so does your investment. You can make money in two ways. The stock price goes up, and you get paid dividends from the company's profits.
The biggest story with stocks is one word: growth. I mean, historically, no other type of investment has even come close to the long-term returns of the stock market. And it's not just about the price going up. Lots of great companies pay out dividends, which give you a nice, regular stream of income. Oh, and they're super liquid. You can sell them and turn them back into cash in a matter of seconds.
Of course, that potential for amazing returns, well, it doesn't come for free. It comes with risk. Volatility is just part of the game. Stock prices can swing like crazy based on anything from an economic report to a single tweet. And when the market takes a nosedive, those swings can mean you lose a significant amount of money.
Okay, it is time for the main event. We've looked at them on their own, but how do gold and stocks actually perform when you pit them against each other, head to head? Let's dig in.
This table right here just lays it all out so clearly. Just look at the relationship between risk and returns. With stocks, you get that potential for high returns, but you have to be willing to accept high risk and high volatility. Gold is basically the mirror image. Lower risk, but you're looking at more moderate returns. You're really choosing between playing offense and playing defense.
And wow, when you look at the actual numbers, the difference is just staggering. Over a recent 10-year stretch, the S&P 500 grew by over 12.5% per year, on average. Gold, just under 4%. This chart perfectly shows you why stocks are considered the primary engine for building wealth over the long haul.
And this right here, this really gets to the core of the whole strategy. Gold is your defensive player. It shines when the economy is in trouble. Stocks are your offensive superstar. They thrive when the economy is booming. They are two completely different tools for two very different jobs. So, this brings us to a really critical realization. Maybe, just maybe, the question isn't gold versus stocks. Maybe the smartest way to think about it is gold and stocks.
Exactly. That's the whole idea. A diversified portfolio lets you have the best of both worlds. Use your stocks as the engine to power your growth, but you have gold acting as the shield, protecting your portfolio when things get rough in the market. It is all about creating that perfect balance.
So how do you find that balance? Well, it all comes down to your personal comfort level with risk. Are you a conservative investor who really prioritizes keeping your money safe? You might lean more heavily into gold. Or are you an aggressive investor chasing after the maximum possible growth? Then yeah, you're probably going to favor stocks.
There's no single magic formula. There's only the one that's right for you. So the big takeaway today is this. It's not a choice you have to make. For a lot of people, the smartest move is to combine the stability of gold with the growth of stocks. You use the shield and the engine together.
Which brings us to the final and most important question, and this one's for you. Now that you understand the shield and the engine, how are you going to build your financial fortress? Thanks so much for joining us for this explainer, and we'll see you on the next one.
Don't forget to subscribe to the channel, like the video, and click on the bell icon to turn on notifications.